you've clearly putting pressure on banks with regards to dividends. I also see in a piece this morning that you talk about banks showing restraints on bonuses. Can you define that a little for us? Do you mean restraints on bonuses for 2019, or is this about 2020 and how you shape the bonus structure there? What do you mean about restraint on bonuses, and what will you do to those banks that don't show restraint?
Well, good morning, first of all, and thank you very much for having me here. Well, I think that as we said with our recommendation on dividend payments, we want to instill in banks a strong commitment to preserve every euro of capital that could be useful to lend to the economy, to small and medium enterprises, to households in the months to come. Showing restraint on bonuses means also paying them, for instance, in shares or share-linked instruments. Already now, euro area banks pay 45% of their variable remuneration in instruments, and so having restraint and preserving capital, I think, should be a priority right now.
Although people, Andrea, have already made, obviously, already have obligations from 2019, right? So is 2019, is it too late for that? Is that done and dusted? Should banks be focused on restraining 2020 bonuses?
Well, again, I mean, the same that applies for dividends. I mean, our economies are going in a pause. We have taken extraordinary measures to tackle this pandemic. And I think that banks, shareholders, and also managers and key risk takers should take also their part of the rethink of where we are right now, and trying to preserve capital as much as possible. As I said, let's say dividends were more of a concern for us because it was 30 billion of euros that were in the pipeline to leave the sector right now. So it was important for us to go out with the recommendation. Bonuses are less of an issue in terms of quantity and in terms of the fact that they are to a large extent already paid in instruments. But still, again, our recommendation to banks is to be very moderate on that as well.
What happens to banks that don't stick to your suggestions around dividends, Andrea? What levers can you pull?
Well, first of all, let me say that I'm very pleased to see that banks are reacting very positively. They are taking responsibility. I think that's also an important step for their own reputation, for showing, corporate responsibility in a difficult time for our economies. If banks decide not to comply with the recommendations, we will decide whether taking other measures. We can also take legally binding measures if need be.
Who are the biggest banks? Who are the biggest dividend-paying banks that haven't fallen into line yet? We noticed in France there are a number of big banks that haven't come out with any statements on this yet.
Well, I'm not commenting on individual banks. I mean, I expect all banks to come in line with the recommendation that we issued.
Let me ask you about signs of distress that you're seeing reported by banks, Andrea. Obviously, you want the banking sector to keep lending to customers. Are you seeing any data or any conversations with the banking sector that suggests their customers are in distress because of the current situation already?
Well, let me say, first of all, that all these conservation measures are not reflecting let's say, a specific fragility that we see right now in the banking sector. It's really aimed at maximizing the firepower of banks to support their customers. What we are seeing, of course, is that bank customers are drawing on committed credit lines, as it was expected to be. So there is a ratcheting up in the demand for credit from corporates, especially, that are probably meeting some difficulties in terms of the freeze in their revenues, which is linked to the restrictive measures adopted by government. So we expect this to continue, and we want banks to be able to support their customers. Of course, the relief measures which are being issued by several euro area governments in terms of guarantees, moratoriums, and the like should also help in this respect.
How about in terms of the financial health of banks, in terms of liquidity? Are you noticing any worrying outflows of deposits?
No, at the moment we're not seeing outflows of deposits. Actually, we're seeing deposits increasing to some extent. The liquidity is being, of course, affected by customers drawing on the lines, but which is absolutely right. And I think it is important that markets investors also understand that our message is that banks should now use the buffers, both the capital buffers and the liquidity buffers. They have been built up in good times to be used exactly in times like this. So for us, there should be no negative judgment attached to banks going down in terms of their liquidity or capital buffers right now.
Andrea, you've clearly spoken out on dividends, and we have the message there and around bonuses. One of our viewers is writing to ask, under what circumstances would you recommend suspension of additional Tier 1 coupon payments to banks, or is this a matter for individual regulators? So are there other ways that you will be intervening in the way that banks pay back money to those who have invested in them?
The matter is for us, and we have no plan to suspend additional Tier 1 or Tier 2, so hybrid capital instruments payments. I mean, there are clear rules in the legislation to suspend those payments, and banks are very far at the moment from the triggers for the suspension of those payments.
Can I ask about bank lending right now, Andrea? Do you see banks continuing to do the lending that you want to see them do, that governments want to see them do in order to get other corporates through this crisis?
Well, as I said, at the moment, there is indeed the credit lines are the main channel through which the banks are supporting their customers. I expect and hope that the relief measures that are being put in place by governments are operational soon, so that the guarantee schemes also can be used to continue and even increase the support to the economy at these difficult times.
You've obviously given a lot of relief to the banking sector. You've told them to use the buffers as you've described, Andrea. The relief that you've offered there, is there any danger that could damage the reputation that the ECB has for rigorous supervision?
I hope really not, because that's exactly how the post-crisis regulatory frameworks has been set up and how it should work. So you should build up the buffers in good times and be ready to use them in bad times. We have not changed for the moment being at all the level of capital that we request banks to have available at all times, but the buffers, we have made them available because that's what they are there for. And the relief that we gave is quite substantial. It's 120 billions of euros of capital that can be used, which amounts, according to our calculations, to approximately 1.8 trillion of potential lending to households and SMEs. So it is quite a significant space that banks have available now.
And this temporary capital relief... Sorry, go ahead, Matt.
Are you concerned about the buildup of debt, Andrea, throughout this crisis? When we come out the other side, is the amount of debt in the system going to be a concern for the banks that you supervise?
Well, the point is that we have to put the economy in a freeze during this period. So we need to allow corporates, small and medium enterprises, not to fail just because of the restrictive measures are freezing their revenue side, and we need to maintain this productive capacity in the system. This debt should be mainly, support for working capital for these counterparts, so should be easily paid back after the crisis, and the government guarantees, of course, are a big relief from that point of view in terms of the final impact on the balance sheet of the banks.